There's a possibility there's more than 3 cuts this year. The number of cuts won't matter as much as the reason. If the Fed is cutting back its number of cuts because inflation is reaccelerating, that would actually be incrementally bearish. Because the economy is showing resilience, so it's strong, but not necessarily inflationary, I think the market would take that as quite dovish because it's really a Fed trying to manage the business cycle. The rationale actually is more important than the number of cuts. The reason the idea of cuts was being rolled back was the January and February inflation reports globally showed inflation was accelerating. Part of that is a statistical aberration. There's just some really poor seasonal adjustments that take place. The March CPI reports coming out of Europe have shown a big collapse from those January, February levels. Like Eurozone, it's back to 2.4%. By the time the Fed meets in June, there's going to be a total of 3 inflation reports, March, April, May. I think by then, markets are going to be a lot more confident that inflation is falling and the 3 cuts actually may be too low. There's possibility